The number one concern of most Americans is
not having enough money to live on throughout their retirement.
surviving on a small Social Security, an unpredictable stock market, rising inflation, and people living into or past their 90s is causing a real concern for most retirees.
The only ones that have the most stable income are those with the traditional pensions like teachers, government workers, police officers, and so forth.
But what if you don't have a pension and only have a 401k or IRA to retire with? Well, in this video, we will discuss how you can use your own savings, 401k or IRA to create your own pension.
No, now we're not talking about a traditional pension or annuitizing your money where you lock up your money forever with the insurance company. Rather, we're talking about a pension hybrid. Hi, I'm Kai.
And I'm Anne with Gracie, our retirement dog.
She's a mess.
She is. Why are you a mess?
According to Forbes, the number one worry in retirement is outliving your retirement savings. This has caused many to be stressed in their retirement, and many are working to their 60s or even their 70s.
Thus forcing many to pull money from their personal savings, IRA or 401k. While this was not a big deal in the 80s and 90s since interest rates were high enough to live on, today, however, most people cannot do that given the low bank rates.
Now let's combine that with low interest rates and the market being more unstable than ever before. Just look at the last 20 years according to this chart. With all these market corrections and recessions we've had, 2000, 2001, 2002, 2009, 2020, and 2022.
Yes, imagine if you retired during these years. This makes it very difficult to predict whether you'll have enough money into your 80s or 90s. And just use some basic logic. Now for simple numbers, we're going to use $64,000 to sustain the same lifestyle. Assuming you have $500,000 in retirement, you will be pulling out 12.8%, nearly 13% out of your retirement savings. That's a lot of pressure for your retirement account to keep up with your withdrawals.
This is why so many cut into their lifestyle, forfeit their vacations, and are so tight with their money, they do not get to enjoy the retirement they had hoped for. That's why, according to Forbes, the solution to solve the issue of outliving your savings is
Stocks, bonds, real estate, right?
Nope. According to Forbes, they mentioned the word annuities as the solution.
Wait, I heard many advisors and articles saying annuities are bad though.
Which one are they referring to? There's actually 5 different types of annuities. We have another video for you to click on at the end of this video where you'll learn all 5 types of annuities and how they work.
Let's first make it clear that we are not fans of these traditional annuities since you lock up your money with insurance companies and no longer have control of your money.
I'm never going to do that. And that's why we're going to discuss the pension hybrid in just a bit. Now, with that said, pensions are annuities. They are called immediate annuities. Take a look at the website, California State Teachers Retirement, or calstrs.com, and also the official government retirees website, opm.gov, and notice the word annuity and how they're referring to pensions.
Now, these are not hybrids. So if you annuitize your money, you will give up control of your money. Again, we will show you how hybrid pensions work in just a bit.
Let's discuss the controversial topic where many advisors will argue that you can just live off your stocks and you'll be just fine. If you time the market just right and you retire for many years while the market is going up, called a bull run, you might be just fine. However, if you get hit with a recession or a bear market in your early years of your retirement, you might run out of the money faster than you or your advisor had predicted.
Again, we made a full video on those exact scenarios showing 2 people taking out 4% of their retirement. Now notice the drastic difference after 20 years. We'll share the video and you can watch it at the end of this video.
Now compare that to someone that was a government worker, a police officer, or a teacher that retired with 80% to 100% of their salary. Take, for example, our teachers here in the California Bay Area that have been teaching for, say, 30 to 40 years. They retire with 90% to 100% of their salary, which is around $100,000 per year. Now, if they lived 10 years, they would have received $1 million in payments. But if they lived 20 years, they would have collected $2 million in their retirement.
Even if someone's pension was only half of that, say $50,000 per year, after 20 years, they would have still collected over $1 million.
Now, who's to say a pension has never made a millionaire? Anyway, this is why we have never had someone with a pension envy someone with a 401k or an IRA.
Right. whereas those with a 401k wished they had a pension.
This is why pension hybrids were created almost 30 years ago. So what is a pension hybrid and how does it work?
Real quick, we want to disclose that we are not licensed to sell stocks or investments involving risks. We're not here to replace your financial advisor either. Rather, our goal is to complement your stocks or investments with guaranteed income for life. So if you're enjoying these videos so far, please help us grow our channel by clicking the like button and subscribing. Any questions you have after this video, we would love to schedule a no cost and no obligation appointment with you. So give us a call. Now back to the video.
Let's first clarify again, we're not talking about annuitizing your money, thus giving up control and locking up your money forever. We do not recommend variable annuities either. Some variable annuities do allow you to make a pension hybrid as well, but their fees are around 2 to 4% on average per year. The pension hybrids we recommend have either no fees or typically only around 1% per year.
So how does a pension hybrid work? First, you take your asset. It could be your savings at a bank, 401k, or IRA money, and you put that with the insurance company into a fixed guarantee cash account or IRA cash account. Think of this cash account like money in my purse, for example. Your principal is protected from all market risks and all your earnings are tax deferred. However, there's still a problem. This asset alone can never provide lifetime income that is guaranteed, so we can still outlive our money.
Correct. If Anne keeps spending our money here, for example.
My money.
Oh, right, I forgot your purse.
My
It's her
money.
money. Okay, on vacations as an example.
And I'm not giving up my vacations.
Well, if she keeps spending all her money and
It's not much.
you don't have a lot.
Yes.
I think you had a lot more in there. Anyways, if she kept spending all of her money on vacations and a lifestyle and so forth, she'll eventually empty her purse, as you can see. Now, what if she was to add a guaranteed lifetime income as a rider on top of her asset?
Well, what's a rider? Well, have any of you purchased an umbrella policy on top of your home insurance policy? This rider works similarly. So this living benefit is a rider on top of a deferred asset that we still control. This could be money from our savings, 401k or IRA. If you use a 401k or IRA, it will remain as an IRA.
So if we keep spending our money,
My money.
her money, and the interest earned does not keep up with our spending, we will continue to still get this income for the rest of our life, guaranteed in writing.
However, if we change our minds, we can cash out anytime. If we pass away, the money can go to the beneficiaries that we choose. We still have control over our assets. We never annuitize our money and never lock up our money forever.
That's right. You'll forfeit your rider or lifetime income, but never your asset. So in review, if you have a pension as a hybrid, this means you can change your mind and cash out. Pass your money on to your beneficiaries as a legacy. But if you live a long life, you'll never ever outlive your income. That's why we call it a living benefit rider.
You benefit as long as you're living.
That's right. Kind of simple. But anyway, and no, you don't have to worry if the insurance company will be here for the rest of your life, since you can pull your asset out, pull your money out, just like you can change your mind on a CD or cash out your savings account. Do you see this hybrid now?
Does this guaranteed income seem too good to be true? Well, is a teacher's pension, government retiree's pension too good to be true? Also, do you personally know someone where their pension just vanished after they've already started collecting it?
I don't know anyone.
Yes, this guaranteed income pension hybrid is not only real, it's been around for almost 30 years.
But here's a $1 million question, no pun intended. How much do the insurance companies actually pay out on these riders? By the way, the goal of this video is to give you a quick summary. There are so many things you need to be careful of, even with pension hybrids. Give us a call and we'll discuss all the pros and cons with you and customize the best pension hybrids to fit your needs. While investment advisors might be able to sell these hybrids, we only specialize in guaranteed income and do not sell investments, thus giving you more solutions and more strategies. We look forward to hearing from you. Now back to the video.
So how much does the insurance company pay out? While some companies only pay out 3 to 5% per year, we look for companies that pay out anywhere from 6% to 14% of your original deposit.
That's no exaggeration. That 6 to 14% that she just mentioned is not only a guarantee, but it is a minimum guarantee.
When it comes to guaranteed income, like traditional pensions and even your Social Security, most of them will pay out the guaranteed minimum you were promised. However, be careful with those that do not show you the minimum guarantee and try to sell you on the hypothetical percentages. We focus strictly on the minimum guarantee so you will have no surprises.
Of course, the percentage payout will depend on your state's availability, but most clients that we've actually helped have been able to get that 6 to 14% as promised. Now, here's a key point though. All guaranteed incomes, whether Social Security, traditional pensions, or pension hybrids, are all based on age in and age activated. In other words, the younger you are when you get into a pension hybrid and then activate your rider at a later age, you'll get much higher income, much higher percentage than waiting to purchase a hybrid at an older age. So call us for more details and we'll explain more.
Yes, imagine getting 8% to 10% of your original deposit. If you do your math and add that to your Social Security income, you might be able to retire with 80% to 100% of your working salary.
Would you believe that? Now, there have been many cases where we've helped our clients retire with more guaranteed income, even more so than when they were working.
Sounds too good to be true? Well, call us and we'll show you how we can make it happen. In the meantime, we would like to get a poll. Is this your first time hearing about a pension hybrid? Please let us know in the comments below.
So yes, you can retire with 80% to 100% of your salary as guaranteed lifetime income using your own savings, 401k, or an IRA. All with the peace of mind you'll never, ever run out of money or deal with the market's downturn.
Yes, imagine retiring with income guaranteed for life and never worrying about the market's volatility or dealing with tenants and all the work that comes with investments. Instead, you can spend your time on vacations. My mind is still on vacations.
I wish we were still on vacation. Well, the concept is great, but be careful. Call us and we'll help you avoid the policies that cap your earnings and charge high fees and high surrender charges. We'll also help you avoid the companies that have a very low payout.
But some may ask, how do you use the pension hybrid to keep up with inflation? We'll be making videos in the future on this topic, so please subscribe so you don't miss it.
Because this is all we do. We don't do any investments. We don't manage investment accounts. Therefore, we will have more resources and tools to give you the best guaranteed lifetime payouts, like we said, 6 to 14%, and combine those payouts with the best strategies, especially regarding inflation.
Again, we're not here to replace your current advisor, but rather be a complement to your investment accounts using a pension hybrid. But at this point, you might still be wondering, is this still another type of annuity? Or perhaps you've heard you should never buy an annuity? Did you know there are 5 types of annuities?
Well, click on this video here where we'll discuss all 5 types of annuities and where all the pension hybrids fit in. Or click here for our entire playlist.